Hey, crypto people, I hope you are having a wonderful week so far. We are here with the latest episode of the Inside Crypto Show, interviews and discussions with regular people just like yourselves. Today, we're joined by Christopher Hitchen, the founder of Mineeezi and host of the EEEZICrypto podcast. He's doing so many things that we could do a week of shows about them. But today, we're just going to focus on Flux. If you don't know what that is, hold on because we will get into it. I have to do the usual disclaimer. Anything said by either Chris or myself does not constitute financial advice. Our opinions are our own and are not to be connected with our respective organizations. Please do your own research. Because it's just Chris on the show today, we can spend a little bit more time about his background and before we dive into the crypto. Chris, welcome and tell us about yourself.
Thanks a lot for being on the show. It's been an interesting journey. I've been an entrepreneur and I've been in investment banking and trading for quite some time now. We're coming up for 30 years. So I started out in computing and I was very lucky to get to work for Glencore, which is the largest commodity trading company in the world. And that kind of pretty much set me up for life, basically, learning all about how trading works, how trading systems work, and how to compute a program. And I've had a very interesting career. I've worked for the likes of Bank of New York, I've RBS, Royal London, Glencore, to name a few. And at the age of 29, I decided we were earning all this money, but not really having much fun, in a sense that I was at my desk at like 6 in the morning and I wouldn't leave until 10 at night. And then I'd get calls in the night about whether or not people could trade because they had to go through us for the credit risk trading system. Deutsche Bank turned around to us and said, "Do you fancy a stint in India?" And at the time, we decided against it. And that's when I set up my first business, which was a property business. And we built that to a decent size and we sold it. And when I sold that, I was like, what should we do next? And I'd always liked the passive income side of things. And we went into co-working. We thought, right, let's do co-working. And that was a really interesting journey. We had big customers, the likes of Sky, and Sky's the main cable provider, satellite provider in the UK. And then COVID hit. And this kind of brings me to the journey of how I got into crypto. And basically, you can't meet up if you're not allowed to meet up. So it killed the business. So literally, all the money we'd invested literally was a failure, basically, because it was like we had to be shut and we were shut for over 18 months. So we're like, what should we do in the interim? I'd always liked the passive income model. I'd always liked the buy-to-let model. And my friends kept on saying to me, you trade normal American equities on a daily basis and options. Why don't you trade crypto? And I said, I'm not interested in crypto. And I was a typical, it's a scam and you can't touch it and stuff like that. And my friend said to me, he says, in it about 20 years that you've been in buy-to-let? I said, yes, 20 years. He says, how much did you pay for your first property and how much have you made? And I said, we're putting about 50K. He says, we made about 200. He says, I want you to analyze crypto and tell me how quick you could make that sort of money in crypto. And he says, I know that you're not going to do this because he said, I've been asking you for 6 months to look at crypto. So he put £1,000 on the table and he says, you can either give that to charity, you can do what you want. He says, but I want you to analyze the market. And I says, go on then, I will analyze the market. I says, I will look at it. And when I realized that I could make the same amount of money in 4 months, that's when it completely changed. And coupled with the fact that we were in a situation where COVID had killed the business, we were like, let's get into crypto. This could be an interesting opportunity. But then I didn't like the fact with crypto, and obviously this is the fact that we're going through in crypto again with the crypto winters, is that you could have $100 one day and then the next day you can have 10. And I was like, how can we get into crypto the safest way, but get a decent return? And that's when I came across mining. And I was like, do you know what? This is the best way to get into crypto, because effectively what you're doing is you're acquiring the crypto at below cost on average, i.e. your electric cost, below the actual cost of crypto. And then obviously you're getting a better return. Now, obviously, fast forward to today, we have obviously had a massive pullback in the market. One of the, I think it's the biggest pullback in the crypto markets. The earnings have gone down massively. Some particular crypto protocols are not earning any money. as in they're below water on the mining side of things. But very early on, we realized that the biggest cost to us was electric, and we had to generate our own electric. So in the very early stages, we partnered up with a number of farms, and literally the farms were generating electric via anaerobic digesters, and that was giving them effectively free electric from manure. So then they would sell it on to us at a considerably lower cost than what you would do from a consumer. So at the moment, on the ETH as an example, we're still profitable. Whereas if you were at home, you wouldn't be profitable. So it's been a very interesting and challenging market that we're in. And I'm a big believer in the mining side of the business. As long as you are mining the green way, which I think the best operators are, if you look at the likes of Riot and Marathon, they're not really crypto companies, they're electric companies because they generate their own electric and then sell it on. Flux is certainly something that I'm very passionate about. And I think the best way to describe mining is this. We've seen this big boom in software as a service. Everything practically these days is software as a service. All crypto mining is hardware as a service, i.e., I get paid by Flux to provide hardware. I get paid by Ethereum network to provide hardware to facilitate transactions. That is mining in a nutshell, and that is what we're up to at the moment.
I have a quick question. So you mentioned the electricity, and what about your hardware costs, right? To get your GPUs, your motherboards, all the wiring, power supplies, and that sort of stuff. How does that sort of factor in the UK?
Obviously, it's very much a demand-led market. At the height of the crypto boom for a 3090, RTX 3090 NVIDIA, you could be paying anything up to £3,000, like $3,600. Now, because crypto's come down massively, so have the hardware prices. Not as much on the best cards, because when we've designed these machines, we've looked at them and said, we're looking at a long-term, 5 years plus. So we've put in the most powerful cards. So your most powerful cards haven't come down as much, but at the bottom end of the market, i.e. 1660, they've halved in price.
Okay.
So obviously, when you're looking at, if you take a typical 6-card rig, the physical costs have, for instance, been 6K. On the ETH, that would probably return 5% as we speak after electric costs. Now, to put it in context, that same rig would be making more like 80% return on value when we're in the boom, as in when crypto, when ETH was 4,000 plus. So it really is dependent on where we're at with the market. But the difference is with mining, rather than investing in a coin, if everything goes tits up as it has now, I'm now sitting on a lot of physical kit that the worst case scenario I could sell. So I can touch that hardware and I've got something to potentially sell, but that's not what we're doing. Like I said, we are profitable in ETH, but we're not profitable as we speak in Flux. Flux is a little bit below the water. But to put it in context, with Flux has a massive potential to over and outperform ETH as an example. Obviously, it's a higher risk. If you look at where Flux has come down, it's come down from about the height of it, about $3.30. It's about 40 cents now. But to give you an idea, if you'd have mined in 2021, in January 2021, when the difficulty was low, because obviously on mining, it goes on how many miners there are, high the difficulty. And obviously the difficulty's come down because a lot of miners have turned off. So if we have 100 miners in the pool and the electric costs go up, what happens is, say 50% of them stop mining. So that means we share the rewards with 50 people rather than 100. So it's actually better to be mining in these tough times, is the polite way of putting it, and potentially then waiting for when we see the boom, then you see the rewards. Now, to give you an example, 2021, January, Flux was at 9 cents off the top of my head. The difficulty was considerably lower than it is now. And literally that rig at the height of the boom, i.e. November of 2021, that 1 month would have earned you $65,000. It really is a case of, and obviously that would pay the rig off. And if I have one big regret with crypto is one, I was ignorant in not getting in earlier, and two, it's again not getting in earlier because I'd have been mining in 2021 and I've made a shed load of cash. But as it is, when's the best time to plant a tree? 100 years ago, and the second is now. I definitely think it's exciting times. It's never been a bigger opportunity in what we're doing.
Nice. I think we were probably going to sidetrack a bit from what I planned, but that's okay. You mentioned like some miners might be giving up given the costs, given hardware, given who knows other factors, maybe no longer belief in crypto or the ecosystem. What's the feeling in your area? Like we've talked about it before. I attend like a weekly miner meeting here in Taiwan, and we've had a good 15% of miners in my city have just said we're out. Do you guys want to buy our hardware? And I'm like, sure, I'm still in. I'll take some cheap hardware. Why not? So what's the feeling in the UK? What's the feeling in your circle of friends or miners, other miners you may know? Are they in? They're out? Are they stopping for a bit?
All the investors that are invested with us are still mining, and we are basically bullish long term. We're bearish short term. I mean, we've gone into this with open eyes, and I think the best way to put it is everyone thinks that crypto is you wake up the following night and you're a millionaire, so to speak. And there has been a few situations like that, but it's a little bit like the lottery. Short term, you can be nothing but bearish. I think because you have to be realistic when you're in this game. But my personal opinion is from where ETH is, it'll probably 10x. Same with Bitcoin. I think Flux 100x. I believe in the project, and this is what I've been saying to people is we've got cracking hardware. Basically, the best way to put it is at the moment, obviously, crypto's coming down, right? So we have a hedge. We trade on a daily basis. So we trade American options. And obviously, from that point of view, we're making money on going short because obviously the market's tanking. So from that point of view, most of the investors are also traders with us, and then they've turned around and said, look, if it gets any worse, switch the rigs off, but we're in it for the long term. We'll turn it off. We'll turn them off for a couple of months. We'll wait until heads above water, and then we'll go back in. The fact is, we can go a lot further down before our head is below water on ETH. Certainly, we're underwater on Flux, and we're underwater on Flux nodes. But again, it's a case of the way Flux works is that you mine Flux and say, for instance, you get one Flux. As Flux then goes and bridges onto another protocol, say, for instance, we're bridging onto E, then you would get a reward of Flux for that. So as it then goes into different ones, and it's gone into quite a few different ones over the period of the last few years, you then get a reward. So it's based on how many Flux are in your wallet. So it's not necessarily gauged purely on what you are earning now. And obviously, if you think of short term, then you're going to be looking and you're going to be disappointed. That's our angle, is literally never been a better opportunity, but we've got to go in this with eyes open, i.e. if we see further catalysts in the market to push it down, i.e. the Fed becomes a lot more aggressive with interest rates, we see further issues with Russia incursion into Europe, we see further incursions with commodities going up. If you look at commodities at the moment, commodities look more like a shitcoin. Literally, you could replace the Shiba Inu chart with soya. Literally has rocketed. You can look at oil. So I think you've got to look at the macroeconomics when you're looking at crypto. And what you've got to say to yourself, if SPY drops by 10%, that crypto will then probably drop by maybe 30. So it really is exaggerated returns. Now, obviously, conversely, it's the other way. And my personal opinion is we're going to see crypto reverse when the Fed says we're stopping interest rate increases, i.e. we have inflation control, it's at 4%. That's when we're going to see. But if you actually look at what's happening in the crypto community, and this is just talking to developers, there's so much good news coming out of it. Obviously, we've got the bad news that gets on the press, you see what in the Telegraph or the Times, and it's like.
So, like, at the moment for you, like, at the moment for me, I just literally 20 minutes before this podcast, I just went downstairs to get my electricity bill for 2 of my farms. And we've talked about this before, and it is staggering to say that I was definitely mining at a loss for the last 2 months, and that's fine. That's something I was prepared for. When I started mining in 2017, I was mining at a loss. Like you talked about this before, that as it goes down, and there's a point where with your investors, with people who are mining with you, they're like, okay, turn it off. But for you personally, are you willing to mine at a loss for the next 12 to 18 months, or is there a point where even yourself you're like, okay, this is enough, I'm gonna stop?
Basically, in a nutshell, what we would do is effectively we'll scale down the operation, i.e., we'll run to say 25% of the rigs. So we'll run them at a loss, but we wouldn't run 100% of the rigs at a loss. Because obviously the fact of the matter is we can actually scale into these protocols now. You can scale into Flux because it's on a number of exchanges. It's not as easy because obviously with mining, you just plug it in, forget about it, and that's that. Certainly, I wouldn't say what I'm not doing as we speak is I'm not expanding the mining. I'm keeping an eye on hardware prices because as soon as I see hardware prices going up, that's potential when we'll invest more before we see like a big leap in hardware. The other thing is hardware is always changing. We have the advent of Intel coming into the arena soon with far more efficient GPU. So it's a case of do we hold off because then potentially, say hypothetically speaking, Intel comes in with a GPU that is 3 times more efficient than a 3090, and you can mine Flux as an example. Then suddenly it's a bit of a game changer because then potentially you could be profitable. So is it a case of, I think it's a case of monitor and move swiftly depending on what's happening. But with the current hardware, no, I wouldn't max out.
So we've talked about Flux, and you are definitely the person from appearing on your podcast as well, I trust most to explain to our audience what is Flux. I know what it is because of being in mining, but from your perspective, what is Flux? Why should people be interested in it?
I think people should be interested in it because I think we've got a. Whenever I look at, and this is when I'm looking at any crypto, I always look at it and go, what's the tangible benefit? And I would say 90% of crypto are Ponzi schemes and they're Peter to pay Paul, and there's no way of them earning money. Whereas Flux, for me, was a game changer. I really think the guys behind it are talented, and I do think they've got a really good project. And what Flux does is this, is it's effectively a decentralized website. So you have a number of nodes, which is currently sitting at 12,000 nodes across the world. And rather than us go to AWS to set up a web app and to have, say, for instance, a website, you can do that on Flux. Now, when you do that on Flux, if I want to do that as a web developer, as a website, a hoster, I pay Flux in Flux. So literally I have to buy Flux, which effectively, whenever you look at any of these protocols in crypto, a lot of them have a lot of selling pressure, i.e., if we have emissions, I'm paying you to be part of my group and I'm going to give you 100% APR or whatever, then for you to make money and to realize you have to sell it. So there's always selling pressure on the protocol. Whereas with the likes of Flux, it's a proper economy. So you come along and say, hey, Chris, I want a website. I'm a website developer. And I say, I'm going to host that on Flux for you. Okay. I need, say, for instance, hypothetically speaking, I need 100 Flux. So I need to go and buy that Flux and then put it in my wallet. So literally there is effectively an ecosystem and a proper economy within Flux. So I see Flux as a hardware as a service, i.e. me, myself, buying computers, because that's all they are at the end of the day. They're just computers. They're just fancy, high-spec computers that are fast. And Flux won't put you on the network unless your computer reaches a particular potential performance, i.e. speed of SSD, i.e. solid-state hard drive, speed of network. And it's all about the customer. Because if you think about it, that's what it is. It's like, we want to provide you with a website that works and works well and fast. And this is massively scalable. Now, if you actually look at Amazon effectively, their most profitable arm of Amazon is AWS. Flux is just Web3 AWS. Because of that, I think potentially it has the potential to do really well. if it plays its cards right. And it's never been about the money, so to speak. They've always said, look, this is the rewards. This is what you're going to get. You are going to get a situation where you're going to get crypto winters like we're in now. But long term, there's a massive potential.
I definitely agree. And I think this is something you put me onto when we were on your podcast before, which is talking about AWS. And I've been reading the news. Like any person who loves tech, you'd be familiar with AWS, you'd be familiar with Microsoft's Azure, which is doing really well as well for them generating money. These are all decentralized computing systems. Chris, so like you've experienced Flux and you've been in the ecosystem for a while. I've been very much in the periphery. What do you think Flux has done to inspire this passion in you? Like you're very passionate about it. What do you think the team needs to do better moving into 2023, 2024?
What has Flux done right? I think basically they've taken crypto and said, how can we make the world a better place? And how can we take what's the best out of crypto and put it into a project? But at the same time, how can we make the project work from a business point of view? And I think that's what a lot of the crypto projects haven't done. And the whole model of this, you mine and you get a reward for facilitating the transactions. Flux is very fast. And then you have the nodes, which then the nodes are the ones that facilitate holding the websites. And then Flux is investigating as we speak into proof of useful work. Now, I personally think that's a real big game changer within crypto mining, because up until now, and so Flux for the future is proof of useful work. And what proof of useful work is this? Is obviously we have the concept of proof of work, i.e. we do a calculation. That's what Bitcoin is. That's what Flux is. And then if you solve the calculation, you then get a reward. Now, some people could say that's just a complete waste of electricity. The fact is if you actually look at how much electricity crypto miners use, it's actually considerably less than the banking industry as a whole, because the banking industry is inherently inefficient. I know this from working in banks. And when I worked in Deutsche Bank, we had a whole office in London just empty for people to go into. We had, just in case anything happened, if there were a bomb, we had a whole suite of computers just lying there, not being used, just in case something happened. So we would spend hundreds of thousands and we'd leave these running and we'd sync everything, and it would cost a ton of electricity. Now, the thing is, with Flux have said, right, if we could take these GPUs, which are vastly powerful GPUs, and we have literally, if you look at how many GPUs are, for instance, on ETH at the moment, it's about 26 million. If you take that computing power and put it to good use, i.e., for instance, mathematically model cancer statistics and research, like for gene therapy and stuff like that, then you've got something that is infinitely more usable and also potentially makes the world a better place. And I think if Flux cracks this, then it will be an absolute game changer. As it is, just with being an AWS contender, I think that's a really good model. But they haven't stopped there. And I think if this goes ahead, then the sky's the limit with the protocol, basically.
Definitely. I mean, like a lot of people, I think you would probably be aware, like back in the day, the SETI project, where you could contribute towards it and they would use your computing power, or folding, which was folding proteins. And I think the idea of doing that at a crypto level, that's awesome. That's exciting. I can definitely see that being very useful in the future. One of the things, because I asked some of our audience, I'm like, what questions do you have for Chris? Some of our audience, they were very keen. They were like, okay, is it possible? People know about the Ethereum merge in 100 days was just delayed, so sometime September. And so some people are like, oh, is it still worth it to get into Flux mining? Do you think so? What do you think about that?
I've done a lot of research about this because obviously it's the big question. I mean, I'd personally just like to see ETH merge get done and dusted. I think for the mining industry as a whole, it's just something hanging over our heads. The big question is how many ASICs are on ETH in correlation to how many GPUs are on ETH. Because the ASICs, they've only got one option. They've got to go ETC because they've got the ETASH algorithm. If you then say, right, well, if this is a high ratio, and a lot of people think it's a very high ratio, i.e. there's a hell of a lot of ASICs and there isn't as many GPUs. Now, what's going to happen with the GPUs and what's already happened with the GPUs is you've seen a hell of a lot of GPUs tail off already because of the increase in electricity. So ETH earnings are down massively. So again, that's knocked people out because of that. So what we're going to see is this. We're going to see those that want to do it long-term in Flux stay in Flux and be rewarded heavily when we see the reversal in the prices of crypto. Am I bullish on Flux? Absolutely. Am I saying mining machines for Flux? Absolutely. Would I put my house into it? No, I wouldn't. I'd put a small portion in of what you can afford to invest in from a long term and lock it up for 5 years. I think basically, yes is the answer long term, but I think what we're going to see is after ETH, this is the stages that you're going to see. You're going to see basically a number of GPUs jump onto Fyro, onto Flux, onto Ravencoin, you name it. They're going to jump onto it. And then obviously, because we've got so many more GPUs on there, the profitability is going to dip. And at that point, you're then going to have the realization of, hey, it's not profitable. And then you'll have a number of people sell the kit, get out, and then that'll leave the diehards. And then obviously the diehards will be there with the kit and they'll get the rewards and they will earn. So it's only a small portion that's going to earn big money, but it's the ones that are in it for the long term that are going to do that. So I think we're in for, certainly my personal opinion is we're not going to see positive returns. As in, my rigs were at one point when we were in this, they were making $600-700 a month for a small 4-card rig. And you're not going to see that for quite some time. And I think you're going to see positive returns start probably January, March 2023.
I like that timeline. One of the things as well is, right, like we mentioned, this is, you are the founder of Mineeezi and you guys do your own crypto mining rigs, and we can see it on the back with your laser projector. They're one of the people in our Telegram group for Amun. They were like, okay, what's the difference with me going to Mineeezi and say, hey, Chris, can you build me a rig, as opposed to me building it myself? What's the difference? Or you hosting it as opposed to me hosting it myself?
There's quite a lot of differences. Building a rig at home, there's a hell of a lot to it from a point of view. It's a big fire risk. You get this wrong, you can melt your cards, you can set the place on fire. We've done that in a controlled environment. We've maxed out every single card on the market, from a 1660 to a 3090, your 6600s, 6700s. I mean, your 6600 AMD is the most efficient card on the market for ETH, right? Your best card on the market for Flux is a 3060 Ti. So you don't necessarily need to go further up the ladder, i.e. to a 3090. So the biggest issue with these rigs is keeping them cool. You keep them cool, they're going to last forever. In not like 50 years, but they're going to last you 10 years. The thing is that the biggest evil, there's a couple of big evils to rigs. One is dust and one is heat. So our hosting centers are filtered environments and they're air cooled. They're not air conditioned, they're air cooled. So literally, because we obviously want to keep our electricity costs down massively. And that brings me on to the big electricity subject. If you're at home, the cost of acquisition of electric is too high to make Flux profitable, or ETH profitable for that matter of fact. The cost of electrician for us is on scale. The more rigs we bring in, the potential that we can bring the price of the electric down. Now, our price at the moment is 20 cents with our provider. Our aim is to get it to 10. But we've talked with the provider and they said, you need to provide us with more machines, as in you buy electric on scale, and we'll invest more heavily in putting solar panels to complement the anaerobic digesters. So it's all about better together on scale than being apart and not on scale. Because at the end of the day, the only reason we're profitable at the moment is because there's a big group of us that are buying electric on scale from the farmers. And we have that model now pretty much tied down. We've designed the service centers. We've got the air cooling systems in place. So it's all about the service rather than the actual. Any man can go out there, or lady can go out there and stick six cards together in a rig, download the Flux software, download the mining software, and be up and running pretty quickly. But then there's the optimization of the cards, which takes some time. And obviously, the key thing here is the environment that the machines sit in. Cheap electric, filtered air, cool air are absolutely critical for long-term profitability. Because if you think about it, if your card goes down, you stop earning, and it could cost quite a bit of money to get that card fixed.
Definitely. You made some very good points. You mentioned ASICs as well, Chris, and I've talked about Bitmain on the channel as well before. I remember seeing a story that earlier this week. Bitmain is just shipping an ETH miner with the equivalent of 45 3080s, NVIDIA 3080s. With the merge happening, do you think Bitmain would try to do an ASIC for Flux or some of the other smaller cryptocurrencies like Firo or Ravencoin?
I think they would if things take off. The issue Bitmain's got when ETH goes, their market's gone. And it's a massive company. So it's what do they do? Is ETC going to take all the slack up? Absolutely not. I don't think so. When I'm out in the community talking about crypto, people don't come to me and go, I'm really excited about ETC and I'm really excited about this project under ETC. I don't hear that. I personally think that ETH's making a mistake going from proof of work to proof of stake. Proof of work is far more secure. And the fact of the matter is we all went into crypto to decentralize it. Proof of stake can easily be manipulated because it's the man with the biggest wallet that basically controls it. Flux has openly said they'll never go proof of stake. Obviously, Bitcoin has said that. So where's Bitmain's customer going to be? And also the quite big question is with Bitmain is just what's the percentage split between Bitcoin and ETH? Is it 50-50? So does that mean that overnight their turnover is going to drop by 50%? Because I know this is from experience. When I had my property business and we went through 2008, I had some of my biggest customers go bust and I lost 20% of my turnover overnight. You go from instantly being a highly profitable business, which we were, to being a loss-making scenario. And that's what probably Bitmain's going to be staring down the barrel of. Now, obviously, as Bitmain mine themselves, so it's like how much money have they got to hold out whilst they effectively bring back their operation. I think personally you will see, if Flux 5x's from here, you could see them specifically making Flux machines. But the issue you've got there is Flux is ASIC resistant. So how would they actually do that is the big question. Ravencoin is ASIC resistant. Firo is ASIC resistant. So it's hang on a minute, because they don't want big powerful ASICs on. How could they get around that? And Bitmain came on. I think Flux had changed their algorithm to stop it.
Yeah, I agree. From your side as well, from what I saw on the Mineeezi website, from the picture in your background, you focus mainly on GPUs. Have you ever thought about going into ASICs or hosting ASICs in your mining farms?
We have. But every time I've done a return on investment analysis, because of my background with the investment banking, I just look at what's the return on investment. Every time the GPUs have beat the Bitcoin miners. Now, that's not to say that couldn't change in the future, and that's not to say that we wouldn't mine Bitcoin with ASICs in the future, because it's something that we are constantly monitoring. And I think we're now at a stage where if you could get the hardware acquisition costs down, which we are seeing that across the board on any type of hardware, and obviously in particular Bitmain, and you've got your acquisition cost of electricity down, then yes, it would be something we'd do. The issue you've got with the Bitcoin side of things is they're 10x the electric. So even at the costs, I wouldn't be profitable in the farms. It just wouldn't work. The only way we would do it is if we move the operations to the States and we're acquiring electric at 7 cents, which you can do for ASICs. They won't house GPUs in most of the ASIC units because the ASIC units are far more compact, so they can get far more machines in, which basically means they can charge far more. Because coming back to what I said at the beginning of commentary, the big companies are not mining companies. they are electricity. So obviously, if I come in and say, hey, can you use my GPU machine? Can I put it in your hosting facility and pay you 10% of what a Bitcoin miner does? They're not going to do it. They're just, but they don't. And that's the issue you have. So it's a case of, yes, we would look at it, but we have to look at it from an ROI perspective.
Chris, despite us not going according to plan, you've answered a lot of the questions already. Before we end off today's show, I wonder if you had any final thoughts about Flux, about mining, about crypto, anything you would want to leave our audience with.
I think the best piece of advice I can give is when you're looking at crypto, look at the project. Has it got long-term viability? Look at a 5-year span. We're going to achieve very little within the next year from a point of view of capital uplift in protocols, but we are going to achieve a massive capital uplift over a 5-year period. And that's what you're going to got to think about. Don't think about getting rich overnight. Mining is one of the best routes into crypto, full stop. The reason I say that is simply it's one of the only asset-backed routes into crypto. If I'd have gone in at 67,000, which pretty much that's when I entered the crypto market, so to speak, what would I be sitting on now? Well, I'd be sitting on, that's a 60% loss. As we speak, I'm sitting on a significant number of rigs that can earn me money in the future. Because just to give you one piece of advice from a trading point of view, never look to the left on the charts, always look to the right. And I'll leave you with that. And what I mean by that is think about the future. What is price going to do in the future, not what it's done in the past.
I love that. That is the perfect piece of advice to end of today's show with. For listeners and viewers who are watching the YouTube video, you can see Chris's podcast over here. That is the main video. Chris, is there any way you'd like to direct people for the podcast, for the YouTube video? Follow your podcast, of course. Is there anywhere else you'd like people to go to?
Search me out on LinkedIn, Christopher Hitchen, and DM me.
Sure.
Any questions? Any people stuck with anything? We've want a little bit of a chat about crypto, mining, you name it. We're here for the duration.
All right, then I will include your LinkedIn. I'll include the podcast as well. And I think I've seen you on Twitter as well. I'll include that. And Chris, thank you very much for your time. It is almost about lunchtime there. It's about dinner time here in Taiwan. I appreciate your time and thank you very much. And thanks for filling us in on Flux. It's also nice to hear it from someone who's experienced the ecosystem. And I hope to have you on again soon at some point in the future. Maybe 2023, we can see how Flux is doing.
Indeed, it's been a pleasure. Thanks a lot for having me on.
No problem.